Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, August 5th, 2009. Well, folks, we're seeing our first down day on Wall Street in quite some time. Not that it's a big down day by any stretch, but nonetheless a solid down day across the board. I'll do a quick check of the indexes, then I want to get into all the hardcore analysis that we always do. I want to talk about some major calls that we nailed and the reasons why you should really be in the research center to get these key levels. Right now, the Dow is down about 82 points on the day, NASDAQ down 29, and the S&P 500 down 8 across the board. So you're really down. The Dow and the S&P 500 are down about 0.8% to 0.9%, and the NASDAQ is lower by 1.4%. So the NASDAQ, again, folks, seeing a little more weakness. Now, we talked about this and nailed it dead on. About a week ago, we saw the SMH, the semiconductors, roll over, and I'll talk a little bit about that call. This alerted us, and I'm going to show you where it was right here, and this is going back to the 30th of July, that was last Thursday, that the market may be nearing a little bit of a top or a little bit of a stall-out period. Look at this SMH, gap up on last Thursday and then roll all the way down, and really since then has just traded sideways. Those are the semiconductors. They're known for being market leaders. Guys, that's the way it is. Known absolutely as market leaders, so very, very important to watch. Now, going back to the SPY, very important to go back to the SPY here, because what you're seeing here, folks, is initially the market's basically gapped up ever so slightly, open basically flat. Now, a call went out about a week or two ago on the SPY that the major resistance would be hit at $100.85 on the SPY. Now, those in the research center got this call over 2 weeks ago, anywhere between a week and 2 weeks ago, that would be major resistance. Well, guess what happened yesterday, folks? At the high of the day, the SPY, which again mirrors the S&P, hit a high of 100.84. Alright, and again, the call was resistance at 100.85, major possible level there. Now, next, today, at the high of the day, the SPY hit 100.86. So 85 was the call. It hit 84 yesterday, 86 today. Boom. Nailed it within a penny both days. And look at the rollover each day. Yesterday, beautiful rollover. Today, beautiful, harder rollover. And the point being here, guys, these calls are given out. Alright? You're crazy not to get these calls. You can base it on shorting opportunities. You can base it on selling long positions. Whatever you want to do, that's what you can do based on these calls. They're extremely accurate. In fact, we're just talking about another possible level of a call we made yesterday, and it looks to be working out beautifully as well. We also talk about oil, gold, the basic commodities as a whole, stocks as a whole, the 10-year, you name it, and of course the dollar, which is one of the main components in this market. Now let's go back to the charts right now. I want to discuss a little bit about what's going on now. And again, a small little gap up, a little bit of a push, and then we rolled down on some weak data. There was some weak data that came out this morning at 10 a.m., and we really saw a hard sell on that. Well, really, it happened a little bit before, but the hard sell really continued through that weak data. Now, many people will blame the weak data, but to be honest, folks, this market was just needing a little bit of a one-day, two-day pullback here. A little bit, ever starting from that high yesterday, then you had a buy program into the close to prop the markets up. Today, we'll see if another buy program comes in. It's very, very possible. But you can see the beautiful little bit of a pop early, right to that level we mentioned, and we nailed this level to the T, babe, and then we saw a hardcore rollover, and then starting to trade sideways here and consolidate. Now, this is consolidation. A lot of support down here. I want to just point this out. The hard sell came right down to our dotted trend line at 99.60. Alright, we hit that 99.60 level beautifully, bounced up, kind of gyrated around, then got a little bit more of a bid, coinciding with every time the dollar dropped, the markets would get a bid. So dollar dropped, oil got a bid, the markets went up. Then the dollar came back up, and the markets settled back down. Then the dollar fell again, popping the markets, and then again the dollar came back in. And we can show you the UUP chart. And here you can see the UUP kind of gyrating sideways, then dumping out here. Every time it dumps, you're getting that move. This move down coincides on the Spider 10-minute with this move up right here. That's as simple as it is. And now you're also ticking up here, and you want to focus in on the UUP and see we're right at the lows of the day, basically, on the UUP. So very, very key here. And the reason why, again, folks, is because oil gets a bid. You can see the oil bid come in here, and that's what's lifting the markets. When oil bounces, you're getting a bid. Now, there's a sector today that's on fire, and I mean absolutely on fire, folks, as this market continues to bounce up a little off these lows. But that sector, folks, is the financials. Financials, everything else is getting clobbered today. Technology's getting hit. You're seeing basically anything commodity getting hit today on the drop in a little bit of commodities. ExxonMobil, for instance, is down nicely on the day. You're seeing all these different ones get hit, but the bottom line is, folks, financials are ripping higher. Take a look at JP Morgan. JP Morgan up $1.50 today. Beautiful move up on JPM. Although there is something that was posted on JP Morgan in the hot charts and alerts, which again, the privy to the research center guys, that's very, very important that you see that for those of you that are research center guys. All right, there's some major things happening in this market you have to be aware of. Absolutely. So go look at that if you're a premium member. If not, sign up to take a look at that. It is important, so important. I can't even describe it because it's showing what it's showing here. Now, a couple other things. Also, Goldman Sachs. So the market's down. I mean, you still got the Dow down 80 points here or so, but Goldman Sachs up $1.30. Bank of America soaring today, up 85 cents. Even Morgan Stanley is up 28 cents. Wells Fargo. Here's Wells Fargo's chart, up 75 cents. Almost all the main financial players here are up. Now, in the financials, the hardcore financials here are doing well. If you look at some of the credit card companies, they're not doing so well. MasterCard down $1.75 today. Visa's down 92 cents. Capital One Financial is down $1.16. So the financials like Goldman and JPM and Wells Fargo, Morgan Stanley, they're all doing well. But if you go a little outside of the direct financial companies to the credit cards, they're not having that strong of a day. So keep an eye on those. Now, really, this market would be down much, much more if the financials were not rallying today, folks. The financials are keeping this market from being down 150 points to 200 on the Dow today. If those were down what the market is down, you'd have a market down 150 to 200 on the Dow. Right now, we're only down 77, 78 points. So you can see it's really, really helping here to keep this market afloat. Now, let's go back to the SPY quickly, guys. I want to quickly touch on key levels here. You have to know your levels. These levels, again, look at this line up here. Beautiful line at 100 spot 85. We hit it yesterday, fell off, bounced, and then rallied into the close on that buy program. Today, again, same level, get hit, and then fall. You have to know your levels. Notice how you came all the way down here, paused, right here on this trend line, lower trend line. This was, by the way, this line up here is parallel to this one right here. That's what we call a channel. Parallel lines creating a channel. When that gets broken, it tells you there's more downside in the market. Sure enough, it gets broken right here. Look at the downfall that happens. And this is all stuff going out in the chat room to our premium subscribers in the chat room as well. Plus, I talked about this parallel line pattern here in the nightly video last night in the research center. By the way, the 40-50 minute videos now sometimes, incredible amount of information in there. Really, really amazing. So you want to join the research center just to get the videos, let alone the new hot charts and alerts post, pro trader watch list, hidden gems. By the way, the hidden gems post from last month, I give a target on these hidden gems because I do them personally. My favorite is small caps. On the hidden gems, we give a target of anywhere between 50% or so in a matter of 6 months. Over the last few months, most of them have gone in the first week 50 to 100%. The latest one from last month, not this month yet, I just posted this month, but last month, it was kind of stalling out here, and just over the last 2 days caught fire. This ORS, take a look at it. ORS hitting the target area, it's all the way down here around 60 cents. It had now hit a high of 98 cents in a matter of a few days. That's Chinese stock. That play is now pretty much over, but the fact of the matter is, guys, that's another hidden gems nailing it to the upside in less than the 6-month target. In fact, it's only a little over a month now that one's been up. And these are hidden gems, are small caps that are really unnoticed by the market. I go out and find them. I do my due diligence. I bring the information to you, let you guys decide what you think about it in the research center and the hidden gems. If you like it, that's up to you. Do whatever you want to do with it. But my point is, another big winner here on the ORS. I just posted the new one a couple days ago on Monday. So that's out there, and we'll see if that decides to make a big move on the next couple months or so. It looks like it's a very, very solid play, the one this month as well, and I do encourage you to join up just to get that. See all the plethora of information out there in the Research Center. $49.99 a month. It's a steal of a deal, folks. Best education, best guidance, and best picks out there in our opinion. All right, folks, going back to the SPY chart on the upside here as we end this video, watch this pattern here. You can kind of see maybe a possible little bit of a channel or trend line developing right here. If this breaks, guess where it's going? So if this line I just drew in breaks, right to the 200 moving average, which is a little lower than double bottom here right now, watch that this afternoon. Right now, you could also be looking for a possible move up. If you move up, you're going right to the 50 moving average. That's at around 100 spot 25. 100 spot 25 would be that point right there at the 50 moving average. All right, so those are your key levels to watch. Right now, what I would call this, folks, is a bearish pattern development. There's bearish pattern here. The only thing that worries me, and I say this before, is the light volume in the middle of the summer here as we await Cisco's earnings after the bell. Does that mean they're going to prop this market up? Again, they did it yesterday in the close. They could do it again today. So be a little cautious, but right now, bearish pattern in this chart. Take care, guys.